The AI thematic side or the factor side, the vol's up towards 100. Bitcoin vol is still at 30. So if you're putting an asset in a portfolio right now, you can have 3 times as much Bitcoin on a vol adjusted basis as you can AI. And that means that we're at a point where I think you should start seeing more and more people as they get more focused on Ethereum get in. Once we get above the 200-day moving average, I believe we're at the start of something new. Until we are above there, I'm trading it actively. I'm trying to make sure that if the bottom is made here, Bitcoin is the only thing that has a moat, which is what's an asset that I don't have to worry about it being disrupted by AI, but I still have to invest. I think every single asset is going to run through a problem where AI is going to run into its moat.
While the world panics about AI taking over everything, one asset just refuses to be replaced. Bitcoin trades at $64,927 on Monday, recovering 1.45% over the previous week. Despite the mild rebound, BTC maintains a bearish bias, with price below a dense band of exponential moving averages. Jordi Visser, veteran macro investor and author of the VisserLabs Substack, believes Bitcoin is the only asset with a true moat. It's the one asset he doesn't have to worry about being disrupted by AI. Every other investment, in his view, will eventually face a point where AI challenges its edge. That's why he keeps investing in Bitcoin, seeing it as one of the few assets that can hold its value in an AI-driven world. Changpeng Zhao does not waste words. The Binance founder and Bitcoin bull posted a single line on X that drew 1.3 million views. AI is great, but it does not protect you against inflation. Bitcoin does. Visser thinks Bitcoin is holding up well on a relative basis. AI-related investments have performed well, but their volatility has climbed close to 100, while Bitcoin's volatility is still around 30. Building a portfolio today, you can own roughly 3 times more Bitcoin on a volatility-adjusted basis than AI investments. Bitcoin's historical volatility runs approximately 30 to 40% annually. Other crypto assets, including Ethereum, can swing as much as 50 to 80%. Higher returns and volatility mean deeper drawdowns and more frequent extremes. Before you dive in, welcome to Bitcoin Frontier Hub. We're building this channel one subscriber at a time, closing in on our first 1,000. Subscribe, and let's build Bitcoin Frontier Hub together.
Bitcoin is more of your focal point. Ethereum's had the big move. It's up as of yesterday's close, or let's say yes, since it doesn't close, as of yesterday's equity close, it was up close to 20% month to date. And just so people understand, that would be, if we finish the month with 20%, the largest month or the best month since August of last year. Ethereum has outperformed Bitcoin. It's been the largest on a cross versus Bitcoin since then. The reason I care so much about Ethereum is because I do believe if AI agents are coming, if tokenization is coming, if all these things are happening, this is an energy within inside the revenue side of crypto. And there's no way to get around what's happening volume wise. I think the Stripe bid for PayPal was a big deal too. I have my crypto 40 name equal weight basket, similar to my AI thematic one, meant to deal with the agentic world. And PayPal was one of the names in it. And so, number one, I was happy I've done my homework and figured out which public companies, because there's 6 of them that are in there, including Robinhood, how they all fit in with this crossover with the AI agents. But I think Bitcoin is just hanging in there very well on a relative basis. It's obviously done well versus AI. But the AI thematic side or the factor side, the vol's up towards 100. Bitcoin vol is still at 30. So if you're putting an asset in a portfolio right now, you can have 3 times as much Bitcoin on a vol adjusted basis as you can AI. And that means that we're at a point where I think you should start seeing more and more people as they get more focused on Ethereum get in. Once we get above the 200-day moving average, I believe we're at the start of something new. Until we are above there, I'm trading it actively. I'm trying to make sure that if the bottom is made here, it's there. I even started to buy a little bit of Micron this week and some of the semis. Micron, I have a position again. It's very small relative to what it was back then. And I'm buying it at higher prices than where I ended up selling it on average. But that's because the new news that has come out over the course of the last 6 weeks and the consolidation and the deleveraging that's happened, I feel more confident in terms of putting a little bit of money in there, but I'm still much more heavily weighted towards crypto. For me at this point, it's Bitcoin, Ethereum, and MicroStrategy. So I'm not. I don't think from. I'm sure this will change as I spend more time in the space. I've never been a big stock person as a macro person. It's been thematic. So even though Micron is in the portfolio, if you ask me why, it's because of AI. Everything I have in the portfolio, to me, is either an AI trade or it's a crypto trade. And so that's it. I really, Eli Lilly, it's an AI trade. Silver, it's an AI trade. Like anything I have in the portfolio is related to the stuff that I write about and I talk about. I believe we are at the convergence between AI and crypto, and that all public companies will be disrupted the same way Adobe and Salesforce have been. Same way the hyperscalers had. They just rallied off the bottom. That's why the S&P's hanging around the all-time highs while AI trades lower. But over the last 9 months, they haven't done anything. So again, when you go through things, I'm just more focused on the AI infrastructure trade. Once the agentic side starts to accelerate, once AGI gets here, I believe the ROIC is headed towards private companies. I believe small private businesses are going to be the winners of this. The enterprises will find a way to reduce their expenses over the next 2 years. We are seeing that happen inside the public companies. If you haven't seen it so far, about 40 of the S&P 500 companies have reported so far. And just like happened in Q1, the surprise ratio right now, we're outperforming earnings. It's been 16% in terms of the beat. So we're, again, headed towards another big month, big quarter for earnings. And a lot of these have happened in the banks and in...
Imagine turning 100 into 1,200, then watching half vanish overnight. That's what just happened in AI stocks. Jordi Visser points to Micron. It ran from around 100 to 1,200, then pulled back to roughly 800, and many AI stocks have now corrected between 30% and 50%. He thinks we've done enough to form a bottom, but like gold, silver, and Bitcoin after October 10th, these markets haven't recovered. Volatility has eased. Prices need time to move higher. Micron's own sell-off has left shares under $850, a different risk-reward than a month ago. The decline ties to technical factors like leveraged ETFs and sector rotation, not fundamental weakness. Growth stays strong. Q3 revenue surged 73.7% sequentially to $41.46 billion. Gross margins hit 84.9%. EPS expected to ramp further. Visser calls this the AI mid-cycle slowdown, the second derivative change. We've seen it before with NVIDIA. Since June 2024, it kept growing earnings and stayed the AI leader, yet the stock gained only about 48% in 2 years. Visser believes after a 30% to 60% retracement, AI stocks will stabilize and move higher, though the fireworks show is over. AI has been in the market for 3.5 years. Morningstar's Global AI Index has more than tripled since ChatGPT launched in late 2022, fueled by capital spending in semiconductors and data centers. Let's get back to the interview.
What's happening is the S&P is making new all-time highs, or equal weight S&P is making new all-time highs. Breadth is making new all-time highs. The AI names are going down, so a lot of people are sitting there seeing their Micron go down and their Marvell go down and their go through the list of all of the names. Every single name, Caterpillar, Modine, everyone that's been, let's say, going up fairly fast is giving back some of that. Now, some of that is related to just what I talked about, which is the AI mid-cycle slowdown is a second derivative change. And NVIDIA went through this back in 2024. And I highly recommend everyone go back and look, because from ChatGPT to about June of 24, NVIDIA went up 12 times. So very similar to, let's say, Micron going from 100 to 1200. Since that period in June of 24, NVIDIA's earnings have continued to grow. They've continued to dominate the AI trade, but in 2 years, they've now gone up 48%. good returns. I mean, you're getting 20+% returns. You're outperforming the S&P, but it's not the 12 times that happened. And that's where we are in AI right now for all of these names. Meaning most of them had 3 to 10 times type moves, especially the semiconductor names, which mean they've built in a lot of the next 2 years. And I think what the market is going through is this second derivative where when you look at the earnings of these companies, you're like, oh my God, they're up 400%, 500%. But then a year from now, they're only going to be up 30%, 40%. So you're decelerating. So that's the first part is I think the market is coming to term with the AI mid-cycle slowdown. And the other thing I wrote about, which is the fireworks show. The under the hood story is that there is absolutely a deleveraging happening. And I want to use, again, a bunch of comparisons. So silver and gold were up massively last year. They had a drawdown, the biggest drawdowns they've ever seen in 30 years on different time horizons that were all within 20 days. The momentum factor for technology has seen an unprecedented move lower. I've posted an X about it. And what that does is the volatility rises, and whether it's a single name retail person that is taking out leverage, whether it's Korean investors whose margins accounts have been closed, or whether it's a long short multi-strat market neutral hedge fund, or it's a systematic quant strategy. And we've seen reports and numbers released from the prime brokers of just very large losses in a short amount of time. And because the volatility has gone higher, whether it's risk parity, whether it's any kind of quant strategy, when the volatility goes higher, you not only have to reduce your risk at that point just from vol targeting, but it also means that that position, when it starts to come back, cannot be as big. So I think the best way for people to understand this was going to happen in a case like Micron by going from 100 to 1,200 and back down to 800 as of early this morning. You've given back now, depending on the name, 30 to 50%. We've done enough based on what I think is there, and I think we'll probably start to form some sort of a bottom here. But like silver, like gold, and another one like Bitcoin after October 10th, these things have not come back yet. So their vol may have come down, but those things have been on the downside and they haven't gone back. The difference is with the AI trade, they were significantly above their 200-day moving average. And so everyone hears this. Many of these names like Micron, they were unchanged for years. Micron was the same price at Liberation Day lows that it was in 2017. So a lot of these were breaking out of long-term ranges. They're way above their 200-day moving average. I think somewhere between this 30 and 60% retracement, they're going to hang in there and they'll start to move higher again. But I think the fireworks show is over. And I think from this point on, some names will do well, some names won't do well, and you'll see volatility and gradually come down, but not quickly and not something that's going to just turn into that was no problem. It was something real, and it's about leverage.
Bitcoin could be entering one of its most important phases as the market shifts from hype to real opportunity. While AI stocks are cooling after huge gains, Bitcoin continues to show resilience and remains a key asset for many long-term investors. If market volatility keeps easing and confidence returns, Bitcoin could be well positioned for its next major move. The coming months may separate short-term noise from lasting value, making this a crucial time to stay informed, stay patient, and watch Bitcoin's next direction carefully. Is Bitcoin ready for its next big move? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon so you never miss the latest Bitcoin insights and market updates. Thanks for watching, and I'll see you in the next video.